Let us now move on to the final quiz. An item of furniture was destroyed by fire. Cost was 1,80,000, against which a claim of 1,20,000 was accepted by the insurance company. The depreciation provision up to date of fire was 27,000. What amount is to be recorded in the account as loss by fire? A. 60,000, B. 1,53,000, C. 33,000 and D. 1,80,000. The written down value of the furniture is 1,80,000 less provision for depreciation of 27,000. That gives us 1,53,000. This is the loss of goods by fire, but then we have got an insurance claim of 1,20,000. So the net loss suffered should be 33. Correct answer should be C, 33,000. 33,000. Next, X forgot to record the following transactions while preparing his final account for the year ended 31st March. Outstanding expenses 20,000, prepaid insurance 2,000, interest receivable on investment 3,000, drawings 6,000. The total change in his profit for the year after recording the above would be decreased by 21,000, increased by 21,000, increased by 15,000, decreased by 15,000. We want to check only change in profit. The change in profit, outstanding expenses 20,000, the profit would be decreased. What is decreased? I'm writing in bracket. Prepaid insurance is 2,000, therefore expense for the current year would come down. Outstanding expense, it's an expense which is a liability which has not been paid. Accrual concept, all expenses must be brought into the books whether paid or not. So 2,000 once we record the expense, profit will come down. 20,000 when we record the expense, the profit will come down. As for 2,000 prepaid insurance, since it is paid in advance, we'll make an adjustment now. Reduce this year's expense. This is not this year's expense. It will be expense for next year. So 2,000 profit will increase. Interest which is receivable on investment, that is accrued income, is 3,000, not considered. That also will increase the profits. So profits will come down by 20,000, but they will increase by 5,000. So net they will come down, decrease by 15,000. Correct answer should be D, option D. Next, the opening stock is understated by rupees 20,000 and closing stock is overstated by 25,000. The net profit for the current year is dash by A, overstated by 5,000, B, overstated by 45,000, C, understated by 5,000, D, understated by 45,000. If the opening stock is less by 20,000, you must understand opening stock adds to the cost. Opening stock reduces the profits. Higher the opening stock, lower the profits. So, if opening stock is understated by 20,000, it would mean that the profit is overstated by 20,000. And closing stock is overstated by 25,000. What is closing stock? Goods produced, purchased but not sold. That is closing stock. So closing stock is actually a reduction in the expenses for the current year. Therefore, increase in closing stock is increase in profits. Decrease in closing stock is decrease in profits. So if closing stock is overstated by 25,000, profit would also increase by 25,000. So totally profit is overstated by 45,000. Overstated by 45,000. Correct answer should be B. Overstated by 45,000. If purchases account is not credited in case of goods lost in transit, then which account can be credited? Is it goods lost in transit? B. Purchase return account. C. Trading account. Or D. Sales account. If purchase account is not credited in case of goods lost in transit, assuming it's an abnormal loss, goods lost in transit account, debit to trading account or purchases account. So it should be trading account. Correct answer C. Trading account. Next. Calculate the subscription income to be credited to profit and loss account for the year ending from the following information. Subscription outstanding at the beginning of the year is 10,000. Mind you, this is subscription income. Subscription outstanding at the end of the year 15,000. Subscription received in advance as at the end of the year 5,000. Subscription received in cash during the year 3 lakh. So A 3 lakh, B 2,95,000, C 3,05,000 and D 3,10,000. The subscription income to be credited to profit and loss account. We received 3 lakhs, which was outstanding at the beginning of the year is 10,000. If it was outstanding at the beginning of the year, it means it must have been an income for last year, which we would have received this year. But we are trying to find out this year's income, so we reduce that. Subscription outstanding at the end of the year is this year's income. Therefore, we add this. This is outstanding at end of the year. This is outstanding at beginning of year. Subscription received in advance as at the end of the year. We have received it, but this is not income for this year. It is income for the next year. It's included in this 3 lakh. So let us remove this 5,000. As a result, the income should be 3 lakh. Correct answer should be A, 3 lakh. Subscription income credited to profit and loss should be 3 lakh. Goods in transit but not taken in closing stock will be credited to purchase account or trading account, B, supplier account, C, goods in transit account and D, cash account. Goods in transit account to trading account or purchase account. Correct answer should be A. Purchase account or trading account. Next, closing stock of previous year is overvalued by 50,000. Due to this, previous year's profit is overstated, current year's profit is understated. B, previous year's profit is understated, current year's profit is overstated. C, previous year's profit is overstated, current year's profit is overstated. D, previous year's profit is understated, current year's profit is understated. Closing stock, higher the closing stock, higher the profit. Closing stock of previous year, if it is overvalued, previous year's profit must be overstated. What about current year? Last year's closing stock will become current year's opening stock. So, opening stock, if it is overvalued, current year's profit will fall. Why? Higher the opening stock, higher the cost, lower the profit. So previous year's profit, if it is overstated, current year's profit will be understated. So correct option is A. If closing stock of previous year is overvalued by 50,000, previous year's profit is overstated, current year's profit is understated. A summary of all assets and liabilities on a particular date is a trial balance, B. Profit and loss account, C. Balance sheet, and D. Fund flow statement. It is a balance sheet. A trial balance will be a summary of all assets, liabilities, incomes and expenses. But only a balance sheet will be a summary of all assets and liabilities on a particular date. C. At the end of trial balance, the following adjustments are given. Stock destroyed 20,000, insurance claim receivable 16,000. The effect of the above adjustments will be shown in A. Trading account, B. Profit and loss account, C. Balance sheet, and D. All the options. It would be shown in all the options actually, because when stock is destroyed by 20,000, one is stock destroyed, or I am calling it abnormal loss account debit. To trading account is one entry. That will be 20,000. So trading account is affected. Next, insurance claim receivable is 16,000. So we would say insurance company account debit 16,000. Abnormal loss account debit, profit and loss account debit 4,000 to abnormal loss 20,000. As a result, this trading account is affected, profit and loss account is affected, and as far as insurance company is concerned, that would go to balance sheet since it is receivable. It is an asset. It is a receivable. So the correct answer should be D, all the options. Provisions are A. Appropriation of profits, B. Charge on profits, C. Both the options, D. None of the above. Provisions are a charge on the profits. B. It's not an appropriation of profit. A provision has to be made whether we are making profits or losses. What do we mean by an appropriation of profits? A distribution of profits which needs to be done only if we make profits. So provisions are a charge on profits. B. Next. A sells goods at 33 1/3% above cost. His sales were 10,20,000 during the year. However, he sold damaged goods for 20,000 costing 30,000. The sale is included in 10,20,000. The amount of gross profit is A. 1,90,000, B. 2,50,000, C. 2,40,000 and D. 2 lakhs. So goods are sold at 33 1/3% above cost. If cost is 100, profit is 33 1/3. Therefore, selling price would be 133 1/3. So what is the relation? Profit and sales is 1/4 by 133 by 1/3 of sales is the profit. Profit is equal to 1/4 of sales. So let us see now. The sales were 10,20,000 totally, out of which 20,000 is a kind of abnormal sale, not for the normal rate of profit. So 10 lakh is sold at the normal rate of profit. So your profit is 10 lakh into 1/4, giving us 2,50,000. This is the profit. He sold damaged goods for 20,000. This cost 30,000. Now damaged goods of 20,000 were sold for 30,000. That means there was a loss of 10,000. So we deduct 10,000. What we get is 2,40,000. 2,40,000 should be the amount of gross profit. 2,40,000. Bad debts 3,000. Provision for bad debts 3,500. It is desired to maintain a provision of 4,000 at the end of the year. The amount debited to profit and loss account is A 4,000, B 5,000, C 6,500, D 3,500. Bad debts 3,000. One way of doing it is 3,000 bad debt plus new provision 4,000 less old provision. This would be the amount to be taken to profit and loss account. This would give us 3,500. 3,500. If we want to think it out logically, it is, we had a bad debt provision of 3,500, then we had bad debts of 3,000, we set off this, so we have a provision left of 500, new provision we need to have 4,000. In order to have 4,000, we take 3,500 to profit and loss. This would be the logic. Otherwise, if you want to do it mechanically, it would be bad debts plus new provision minus old provision. Correct answer 3,500D. Next, in the books of a manufacturing concern, opening stock consists of A. Raw materials, B. Work in progress, C. Finished goods, and D. All of the above. In the books of a manufacturing concern. D. All of the above. In a manufacturing concern, you might have an opening stock of raw material, opening stock of work in progress, and an opening stock of finished goods. Trading account is A. Personal account, B. Real account, C. Nominal account, and D. None of these. Trading account is a nominal account. C. Nominal account. It helps to ascertain profit. You take direct cost and sales income to the trading account. Sale of scrap of raw materials appearing in the trial balance are shown on the credit side of. Sale of scrap of raw materials appearing in the trial balance are shown on the credit side of trading account, manufacturing account, profit and loss account. D. None of these. Correct answer should be B. Manufacturing account. D. Manufacturing account. Bonus given to employees is recorded in the A. Trading account, B. Profit and loss account, C. Profit and loss appropriation account, and none of these. It's recorded in the profit and loss account. Bonus to employees is recorded in the profit and loss account. Next, capital introduced in the beginning is 4 lakh. Further capital introduced is 1 lakh. Drawings is 2,000 per month and closing capital is 6,36,000. What is the amount of profit or loss for the year? 1,60,000 profit, 1,38,000 profit, 7,12,000 profit, or none of the above. So closing capital 6,36,000 less opening capital 4 lakh. That gives us 2,36,000. But then we had further capital was introduced 1 lakh, that is therefore not a part of profit. So we have 1,36,000, but we withdrew some money. What is that? 2,000 per month or 24,000. That had we not withdrawn would have been a part of the profits. Therefore we get 1,60,000. Profit should be 1,60,000. Correct answer should be A, 1,60,000. Sales is equal to A, cost of goods sold minus gross profit. B, cost of goods sold plus gross profit. C, gross profit minus cost of goods sold. And D, cost of goods sold plus net profit. Sales is equal to cost of goods sold plus gross profit. Option B. Correct answer is B, cost of goods sold plus gross profit.